just wanted to take a moment to address and thank our program collaborators and exhibition sponsor, First Horizon, for being our host this evening. And at this time, I'd like to go ahead and introduce our Curator of Academic Programs, Katie Malone, to kick us off. Welcome, Katie.
Thanks, Stacy, and welcome everyone. Welcome to Independence Through Financial Literacy. This program was devised to complement our exhibition Women's Work. Women's Work showcases art from our permanent collection that was made by women. And the exhibition in part shows how women developed independence so they can maintain a creative practice despite a historical lack of support from society. And one thing that was universally crucial to these artists was having some sense of financial independence. And such independence is still critical and no less important today when somebody's trying to achieve their goals. So today's panel is going to help us all, and I do mean all, myself included, to become a little more financially literate. So we have some tools that will help us maintain the freedom to pursue our dreams. Our format will be as follows. First, each panelist will tell you a little bit about themselves. Then we will have a few set questions from the president of the McClung Student Advisory Board, Sarah Lockridge, and two student ambassadors from the College of Art and Sciences, Maya Workman and Morgan Matthews. After that, we'll open up the floor to general Q&A. And again, as Stacy said, you can put that into the chat. I'm very grateful for our student collaborators, Maya, Morgan, and Sarah, to you, our guests, for showing up, and especially to our generous expert presenters from First Horizon. Not only did they help us put on this exhibition that's so beautiful, they're also sharing their expertise with us today. So now I want to introduce Amy Moffitt, who is a director of financial wellness. Robin Hart is a relationship banker at downtown Knoxville location, right on Gay Street, I believe. And Christy Blevins, who's a financial well-being coach for Operation Hope here in South Knoxville. So with that, Amy, Robin, and Christy, please take it away.
Sure. Well, thank you so much, Katie and Stacy, for that great introduction. Good evening, students. Thank you all so very much for your attendance and participation in this awesome event. We are absolutely thrilled to be here and so thankful for the McClung team's partnership. I'm Amy Moffitt, and I manage and direct First Horizon's financial wellness programs. I also provide leadership, change, and developmental coaching, amongst many other things. I wear a lot of hats, but my role is so unique, but I find my passion in doing this right here, working with college students and helping them build a strong financial foundation. Financial wellness and taking steps to a financially healthy lifestyle is so very important. To give you a little background, I grew up in a stereotypical home in the 80s and into the 90s, telling my age here. The man of the house worked and made a living and made the money. And the woman of the house raised the kids. She cooked the meals, she cleaned the home, she did all the laundry. The woman did not work, and she did not have much control of the finances in that time. I didn't grow up feeling empowered to make a great living financially, or to even proactively manage my finances, or even learn about money management. Times have changed drastically, and us women now, we're empowered to be professionals and bring home the bacon and manage our household finances. A little bit more about myself. I was a first-generation college student, and when I moved from Knoxville to Johnson City, Tennessee, I knew very little about personal finance. During college, I worked 3 jobs at one point while I was attending school full time, but I didn't have a dime to my name. And most of the time I fell short on paying my rent and my other bills because I didn't budget my income. I had several credit cards that I had maxed out because I didn't know how to properly use those credit cards. I was never able to go on those fun trips with my friends because I didn't understand how to set achievable financial goals. So all of this is what drives my passion today. I understand and I know how real financial stress is. My goal is to give college students that much needed financial education and provide guidance to a strong and secure financial future. So I think that's enough about me. Robin, do you want to introduce yourself next?
Certainly. Thank you, Amy. So my name is Robin Harp, and listening to you talk, Amy, we have a lot more in common than I ever realized. I too, when I went to college, didn't know a whole lot about budgeting or how to spend money, how to save money. I worked several jobs. The best part of my job right now is that I get to help people. And I have 2 college students of my own that they're adults, so I've raised them, and they're as different as night and day. And I'm going to use some of their experiences as I talk a little bit later. But I love to help people. I love to talk to people about their money. And a little bit about what I do here at the bank. I'm the person, when you walk into a bank, that you may see them sitting at a desk. I'm not traditionally a teller, although I do run transactions. I help people with their lending needs. If you need a new car or you need a home, you would talk to me. If you need to open a checking account or a savings account, you would talk to me. If you need investment advice, you would talk to me. So I'm kind of a jack of all trades, master of none. I help a lot of people with problem solving, whether their debit card gets stolen or they need help with banking online. I am just thrilled to be here tonight. Thank you for having First Horizon do this. And I want to say there are no dumb questions. Please do not hesitate to ask a question, because if you aren't taught about money and how to manage your money by your parents, then I find you pick up some really poor habits, whether that's in college with your friends or whether it's with people you work with. So kudos to everybody who is taking the time out of their busy schedule and away from their studies to get onto this WebEx and to listen and learn. And with that, I'm going to turn it over to Christy Blevins.
Thank you. Hello, everyone. Like she said, my name is Christy Blevins, and I'm a financial well-being coach with Operation Hope. Operation Hope is in partnership with First Horizon here in Knoxville. But I would like to give you a little bit of information about Operation Hope. We have been in existence for over 28 years. We're located in 26 states. And also we have a community uplift model, so where we focus on 4 areas. We have the Hope Inside Adult, where we focus on the basics of credit money management. We have a home ownership program and a business program. We also have the Hope Inside Youth, where we focus on the basics of financial literacy. We have the Hope Inside Workplace, where we look at the employee financial wellness. And also, finally, we have the Hope Inside Disaster Program, where we actually focus on the emergency preparedness of any individuals who have experienced any natural disaster. So basically there we serve as a liaison between the client and FEMA. So basically what drives my passion and why I do what I do, basically in this program and what we have seen here in Knoxville and also throughout the United States is that we have seen a lot of financial generational curses being broken. And we all know that financial literacy is important because it equips us with the knowledge and skills we need to manage money effectively. Just a little bit about me. I didn't grow up knowing anything about financial literacy, especially when it came to savings, budgeting, credit, or even just paying bills on time. And like a lot of what was mentioned, I was also a first generational college graduate as well. I came from a family who didn't know anything about managing money throughout life, especially as a young adult. There were times, to where, I didn't know, I made a lot of money mistakes basically because I wasn't taught. And I know you all have heard the term, you model what you see. That was me. I was making some of the same mistakes that my parents were making as well. But it wasn't until, I had my children, I knew that I had to do something different, especially when I was unable to save money or buy the things that they needed. I remember basically by the grace of God, there was an older friend who taught me about a budget. That then changed my life. And that's where I had learned to, start paying my bills on time and basically saving money. So that was the moment when I knew, what I do now needed to be taught. So now, basically I'm with Operation Hope. I'm here to teach the basics of financial literacy by empowering the community become basically financially free. And basically, we do this by teaching and equipping individuals with the tools they need. And also in a time, and actually my experience growing up in a single home, a single family home, some of the women I have been around, and basically myself too, I had to do a lot of managing and make my own financial decisions in my household. I remember, my mom just paying the bills, but even outside of that, although my dad was there, he actually provided. But even in my own household, even today, to be honest, I manage the money, okay, by creating a budget and making sure that the bills are paid and so forth. However, me and my husband, we look at the budget together, but I'm the one basically managing a lot of things. So, it is very important as women that we empower ourselves financially. And I'll turn it back over.
That is so inspiring. You three are so inspiring. Okay, so to start us off, we're going to go to our prepared questions from our partner student organizations. And again, as you're listening and thinking about these answers, please do add any additional questions into the chat, and we'll get to those next. First, I have a question from a former student of mine that I wanted to use to kick us off. She's not here, but the question is, what is the best way to avoid minimum balance and other kind of penalty fees that might be associated with someone who's living paycheck to paycheck or just getting started in their finances?
Robin, we're going to let you take that one.
Absolutely. Thank you. Thank you. So whenever you use a charge card, the bank or the credit union is going to require you to pay something back, and that's called the minimum balance. You can pay back just a minimum, and it will usually say on your statement, if you make the minimum balance payment, it may take you 6 years to pay off your $500 debt if you're paying $5.40 a month. So what you need to do with the minimum balance, or what you need to think about with credit cards, is it's simple. Don't spend more money than you have. I love for my college students to get a credit card because we have a student credit card that will allow them to spend up to $500. And I think it's a good tool to learn how to manage your credit. What I do suggest to them is to increase their credit score to not utilize that credit card any more than 30%. So if you have a $500 available balance, then don't spend any more than $150 a month. Pay it off, okay? The minimum balance is just what the bank is going to require you to pay, and that's going to be something. And if you don't pay all that you have charged, you will pay interest. And credit cards can have very high interest rates. I hope that answers the question. Feel free, Amy or Christy, to add on to that.
And I don't know if maybe the question also involves even like bank account fees or paper statement fees. If you have an account with a bank or a credit union, sometimes you could be charged fees on your checking account or your savings account. And oftentimes those are minimum balance driven as well. And so I would suggest in that case, if you are getting fees from your bank that are kind of like that monthly maintenance fee, if you will, to reach out to your bank and ask, is there a way or a balance that you can keep to waive that fee? Because those fees, they do add up. And of course, there's the the bad overdraft fee. I think probably everyone has gotten at some point. I know I have. So the best way to avoid that overdraft fee, just like Robin said, don't spend more than you have. And you can always link a savings account as an overdraft protection to your checking account. So that's another great way to avoid some of those bank fees.
Yeah, that's such good advice. And definitely those overdraft fees, man, those are pretty brutal, but I guess it's better than the not getting paid fee. So let's start to go to our students who presented some canned questions. Let's start off with Morgan Matthews. Morgan is one of our student ambassadors from the College of Art and Sciences.
Hello. So my question was, how do you create a realistic budget? And could you share a few strategies or tips to help stay on track?
Yes. So first of all, we know that a budget is a tool that will help you save money and get out of debt. So a budget, basically, I tell people, is the foundation for your money. And I will also encourage you not to spend any money outside of your budget. And also to keep in mind, a budget consists of your expenses and income. So basically, kind of see that as your expenses is money that's going out, and your income is the money that you have coming in. So basically, in order to create a budget, I would start by tracking my expenses. And when I say this, most of the time I encourage people to basically track your flexible expenses. So when you think about flexible, those are the expenses that does not have a set dollar amount. So this would include like your food, clothing, entertainment, any habits you may have, or anything like that. Because when you kind of think about it, when you usually pay your bills, those are your fixed expenses. Those are the set dollar amounts to include like your rent, utility, cell phone, car payment, and just different things like that. So basically, just keep in mind is you just want to write down every expense, basically when it comes to your flexible. Okay, so every time you make a purchase or spend money, I encourage you to write it down. And basically, what this does for you, this actually helps you create a budget, and actually, you will see exactly where your money is going. So basically, I encourage individuals, you can, and it's some of the things I teach is very basic, and I do that for a reason. So basically, you can use like a notebook sheet of paper, if you just want to, track and see it that way. Or if you're using cash, it's very important that you keep your receipts, or even using your debit card, you want to look at those bank statements. And you kind of want to get in the habit of looking at those bank statements on a weekly basis. And then I say weekly for a reason, because you'll be surprised on how a lot of people do not look at their bank statements. But this is basically, it helps you track, especially if you're using that debit card often. So, but once you get an idea of how much money you're spending, then that's when you're able to create a monthly budget. Okay. Because at that point, you will know how much you're spending basically on your food or clothing, just to name a few. And it's very important that you create a monthly budget, because basically it's an overview of what you plan on spending monthly. And we know that it's not an actual amount, but it's basically just a plan. So you're kind of gauge where you are monthly. So, and also you want to keep in mind that every month will be different, especially when you're setting up your budget, because you may be planning, to purchase a graduation or a birthday gift, or maybe you need your car service. Things just change from month to month. So keep in mind, you want to, try to set that monthly budget. So again, just keep in mind, you want to track your money, track all of your expenses, and that will help you come up with a monthly budget. So basically, to keep in mind some strategies to kind of help you stay on track, it's very important to know your why. Okay. Anytime it comes to money, I tell people you want to set goals for yourself, and you want to know your why. Basically, what goals are you trying to achieve? And then actually a part of your tracking, you're kind of measuring, where you are with your money and with your expenses, because the goal there is to stay within the budget. So, and another thing that I will also recommend is you want to kind of, set aside at least 30 minutes weekly, even if it's on a Friday or Sunday, just to kind of go through your bank statements and your receipts, or if you are using that notebook sheet of paper, just to see where you are with your tracking, to make sure that you are staying within your budget, basically. Another tip I will also recommend, and I know Robin had mentioned this earlier, I too have two children in college, okay? I have one graduating actually from UTMA, so yes. But even this is something that I teach them with this budgeting method. Is actually, and I can put this, or someone can put it in a chat for me, but it is a 10-10-30-50 budgeting method, okay? So basically 10% will go towards your savings, another 10% will go towards giving, 30% towards your incidentals, and those are your flexible expenses, more so like your food, clothing, nails, shoes, hair, whatever it is you're doing. And 50% of that will go towards your bills. So include your rent, utilities, car payment, car insurance, which, like I said earlier, your fixed expenses. So actually helping them on this method, and also with my clients, they actually have a way to set up their budget just by doing it this way. And trust me, it works. And I tell people a lot of times too, even when you have attempted a budget in the past, or even if you're working on it now, if you never have done it in a while or never before, you are going to make a mistake. And it's okay. You just keep attempting that budget, because eventually you will get it right. But following that method will actually kind of help you stay on track. And like I said, remember your why.
Thank you so much. That was a great answer.
You're welcome.
It was. I love remember your why too, because I know that sometimes it's really hard to think why, I really want to go out and spend all this money with my pals, but maybe I'll only have like a slice of pizza as opposed to a pizza and something else. I don't know. It just keeps you focused on the end goal. So let's turn to Maya Workman, another one of our student ambassadors.
Hello, I was wondering, when is a great time to start saving money, and is there a good way to kickstart savings habits?
This is Christy again. I'll take that one again. But again, Robin and Amy, you can also add on. But you will hear me say this all the time, because this is how I teach my clients. Again, it goes back to your why, when it goes to saving as well. And also, it's very important that you set financial goals. Okay. You may ask yourself, where do I see myself in 5 years financially? Okay. But it's very important. And this is just how I coach my clients. It's very important that you start with an emergency savings first. And the reason why is because life happens. It happens to all of us. It doesn't matter who you are. Okay. So it's very important that you set money aside for that. So even with that being said, depending on my client, we are a program to where we meet our clients where they are. Okay. Because we realize a lot of people are in different income brackets. So it depends on your income, it depends on your budget, but start now, basically. So even if it's $20 you can put aside monthly, I recommend you to do that. Or it may be $100. But again, it goes back to your budget. Your budget will determine how much you can save, okay? And also, just going back to that, remember, like I said, in that budgeting method, even if you can try to say at least 10%, do that. But again, it's very important that you start now. And Amy or
And I'll
Robin?
add on to that. Sure, I'll add on to that if you don't mind. Some ways that have helped my husband and I really kickstart our savings habits, because I'll tell you, we were not the best savers until, recently actually. But, like Christy said, it's super important to set those achievable financial goals in advance. But oftentimes the hardest part is proactively setting that money aside to fund those financial goals. I'm a big believer. Christy mentioned the 10-10-50-30, right? I've never heard it put that way. And I love that, because we follow the 50-20-30 rule, which is basically the same thing, except for that 20 is broken up into 10% giving and 10% planned expenses. But my husband and I, we've been following that rule for just a little while now. And that rule has really helped us kickstart our savings. But what has helped us even more than that is automating our savings. And what we do is we get paid on Fridays. I get paid one Friday, he gets paid the next, and so forth. So we get paid on Fridays. And so on Fridays, I have money automated coming out of my checking account on that payday into several different savings accounts. And so that way we can't see that money, we can't touch that money, we can't smell that money. It's automatically coming from checking into savings and helping to fund our financial goals. And like I said, we have several savings accounts. Of course, we've got that emergency fund, just like Chrissy mentioned. That is so important because life is going to throw you so many curveballs. You've got to have some backup. And so we fund our emergency fund. We fund a Christmas gift account. We fund one for vacation. We've got one for a rainy day fund. And we don't put a lot of money into those accounts each week, but we put something in those accounts each week, and it has helped tremendously. And I just saw a chat come up about hiding your savings so it's harder to access. 100%. I hide all of my savings accounts on my online banking because I don't want to be able to log in and see it and have that, oh, well, I can just transfer money from emergency account into my checking account because we want to go to dinner with some friends. If it's not on my online banking, I can't see it. To me, I can't easily access it. So that's another very great trick that I also can speak from experience on, is hiding those savings accounts from your online banking so you can't just go in and transfer when you want to.
I also want to add a couple of things. You know, if you will start diligently saving, you have an opportunity now at your age to change and to affect your family tree. My husband and I came from very different types of families. My parents saved a lot of money. His parents did not. So we've been married for 30 years, and we've had the opportunity to work through some things. And fortunately, we are changing our family tree for our kids to give them a really great start. And the second thing is, as much as we all wish COVID hadn't happened, the lockdowns, we're really, when you think about it, what an experience to live through, what an opportunity to learn. So if you haven't been in the process or the habit of saving money, you have to know by now how much better your life or your siblings' lives or your parents' lives would have been had they had $500, $1,000, $2,000 socked away. Because quite honestly, I remember going to the grocery one morning before work, March of 2020. I went to Walmart to stock up, and I thought, you know, if I get enough Gatorade, enough water, enough canned goods, if we get COVID, we're good for 2 weeks. This is going to be done with. It's been over a year. So take a few minutes to reflect on what you've learned, what you've seen, and use that to motivate to start saving right now.
That was great. Thank you.
Yeah, thank you for that. Excellent advice for, again, all of us. So let's turn to Sarah, from our McClung Student Advisory Board. Sarah actually has the next two sets of questions, so I'll just let you take it away.
Yeah, so I have a few questions. I'm a graduating senior, just got a big girl job, and just got my first credit card. So I have several questions for you all, so I appreciate your time. The first one being, how does credit impact me and why is it important? And also, how is it calculated and how should I check my credit score?
That is a lot about credit, but credit is so important. So we're going to spend some time here talking about credit. Credit's going to follow you around for the rest of your lives, y'all. It is like a bad disease. It's just going to follow you around forever. And it's really going to impact your financial journey in so many ways. A few examples I can think of off the top of my head. Credit could raise the price of your bills. Cell phone providers, insurers, utility companies, they all pull your score now. They could charge you fees or require deposits or even increase your rates just based on your credit score. It could also keep you from renting a new apartment or even a new home. Landlords, they want tenants with good to excellent credit scores. It could keep you from getting hired Employers also now run credit checks on job candidates, and that helps just reduce their risk in theft, fraud, and then just other, employee-related issues. And of course, credit to keep you from getting approved for loans. A low credit score indicates that you're a higher risk when it comes to lending money. So that could cause you to get declined for a loan, or give you a higher interest rate. Even if they don't decline, they may increase your interest rate. So there's so many ways credit is going to impact you. So the next part of that question, I think, was calculating credit score. So I'm a visual person, so I'm going to share my screen real quick, just to kind of give you a little bit of a better understanding on credit calculating. I hope I'm sharing the right screen. I shared the right screen earlier, so hopefully you all see a big FICO score image. So credit is complex, y'all, and we could probably spend hours talking about credit. And so I'm going to share with you this FICO method. And I'm going to do that because 90% of the nation's top lenders actually use the FICO score to determine your credit worthiness. So it's really important to understand how this method works. So it's broken down into these 5 factors that you see. And the biggest and most important of those factors is your payment history. So that's 35% of your FICO score is made up of your payment history. The very first thing that lenders want to know is how and if you are paying your credit accounts on time. Are you late every month, or do your payments arrive on time? It's really important, that payment history. The history of your payments is the strongest predictor of whether or not a lender is going to loan money to you, because it tells us whether or not you're going to pay your debt as you have agreed to pay your debt. The second largest deciding factor that you see there is amounts owed, and that takes up 30% of your total FICO score. This really means how much debt you carry in total. Overextending your credit could indicate that you have poor money management skills. So keeping your overall balances low will really have a positive impact on your overall credit score. And then the next piece is credit history, and that makes up 15% of your total score. So the longer your credit history, the stronger your score. This percentage takes into account how long your credit accounts have been opened and how long it's been since your credit accounts have been used. And then the next piece, we're going to talk about credit mix. So that's about 10% of your total FICO score. This mix includes your credit cards, which are often referred to as lines of credit. It includes installment loans, which are your regular fixed loans, like a car loan. It includes mortgages and also finance company loans like cash advances, if you've ever had to get a cash advance. Having a great mix of loans helps to improve your overall rating, and also proves to lenders that you can manage different loans and different lines of credit properly. And then that last deciding factor is new credit, which is also 10% of your total score. Opening several new credit accounts within a short period of time could represent that you're a higher risk, especially if you have a short credit history. And being a student, you probably do have that short credit history. Therefore, if you're opening several lines of credit at once, you're indicating risk again, which again is going to affect that overall FICO score. Christy or Robin, do either of you have anything that you would want to add to credit calculations? I'm going to stop sharing.
No, you touched on everything. I know one of the things, going back to the mix of credit, as an installment, your student loans are also calculated into that percentage. So keep that in mind.
Yes, and I was just going to add a couple of real life examples. My older son, we never got him a credit card, just thought it'd be better if he didn't have it when he was in school. So when he graduated from UT and went to buy a car, because he had no credit history, the interest rate was really high. Our other son, younger, he goes to ETSU. We got him a student credit card. So he's already building his credit. And when he goes to buy a car, they're going to see a nice, long credit history with payments made every month. So credit is a tool that you need to be able to use wisely. And if you don't, then you really are going to pay the price. So get some credit, use some credit, but just be careful.
Following up like on that again with more credit questions, how do you potentially repair a poor credit score, or is there any way to do that?
Yeah, so like was mentioned before, credit is very important. Like Amy was saying, it determines your spending power on how much you will pay for your home or car or whatever it may be that you're trying to finance. And just to reiterate, remember, the higher the credit score, the lower your interest will be. The lower the credit score, the higher your interest. So it determines how much you will pay on almost anything, basically. But I would recommend you, I think this was part of the question too, to go to www.annualcreditreport.com to look at your credit report for free. Now, keep in mind, there are 3 different credit bureaus to include Equifax, TransUnion, and Experian. You can look at all 3 of those credit reports once you go to that credit report for free. However, it will not give you your score, but it will give you all of your identifying information to include your name, your loans, addresses, just to name a few. So basically everything is listed on those reports. You want to make sure that everything is reporting accurately. If it's not, then, part of this program, Operation Hope, we can help you dispute anything on there. But you also want to make sure if you do have any derogatory or negative debt, that would include like any collections you may have, or if you have anything reported on there that's listing any of your past due accounts, that is seen as derogatory or negative. But again, if there's anything on there reporting inaccurately, we can help you dispute any information on there. And when you're disputing any information, it's basically to where the credit bureau will do an investigation, to make sure, that everything is correct. If they see that it's not correct, then by law, they will remove that from your credit report. Okay. Now, to clear up anything, if you owe any debt, you want to come up with a plan on how to pay that debt. It may be to where you're settling some of these accounts, or maybe you can get on a payment plan with whoever that creditor is. And again, like I mentioned earlier, at Operation Hope, that's what we're here to help with. We can help you come up with a plan. We can walk you through step by step on how to clear up any negative thing on your report. Remember, our program is free. And if you don't have a credit score, we can actually tell you ways on how to establish a credit score. And also, just quickly that I want to share too, just going back to the importance of a credit score. I'm actually working with a client now who's around 70 years old, uh, needing credit. All his life he never needed it, but now he does. So, like Amy mentioned earlier, it's very important, that you start now and it will follow you throughout your life, the rest of your life, basically, because that's just the time we're in. And also, going back to Robin, like she said with her 2 sons, on how one of them didn't have credit and how she started the other one with credit. With my son, one of the things we have done to help him is that I have a credit card. I only have one, by the way, because of the bad mistakes I made in the past. Okay. But what I have done, I have added him on that credit card as an account holder. Okay. So what that means, he went from having no credit score to having over 700 credit score, because what had happened was he acquired all of my payment history and everything that I had from that credit card. Now, in some instances, I will recommend those things, but I tell people, you want to make sure whoever that's helping you with that, you want to make sure that they're paying their bills on time and doing everything that they're supposed to keep that credit score up. Because if you're at it on a card like that, and if they're making late payments and different things like that, that will reflect your credit report as well. So you have to be careful when you're doing those type of things. And then I also know that was mentioned too, the beauty of this program is that we actually teach you how to use the credit score or the credit card. We teach you how to save, how to budget, to make sure, as an adult, you won't go out and make the mistakes that a lot of us have made. Okay. So that's what we're all about. But, Some people, you know, like they say, oh, I'm scared to get a credit card because I don't want to mess it up. So one thing that I encourage people there, you know, when it comes to your finances, it's all about your mindset. Okay. And that's one thing that I really try to incorporate and change in people, because to be honest, my background is in social work. Okay. So I look at the behavioral side on a lot of things to help people make these changes and make sure that they're making them, you know, for the best of for themselves and for their families to come, because this is what this is all about. So with that being said, it's very important, you know, again, going back to knowing your why and using it to help you, because I don't like that personally. So when I'm teaching people on how to increase a credit score or establish a credit score, that is not really the issue, because like I tell them, okay, I'm just teaching you these things to help you get a credit score. It's not about being in debt, because one thing I teach about debt, anytime you're actually getting debt, there's something bad debt versus good debt, you're robbing your future self. Okay. So that's another conversation. But at the same time, you know, you just want to know how to use it to make it work for yourself. And we can teach you those things.
And I'll add a little bit to that. Christy mentioned annualcreditreport.com. That site is wonderful. You're entitled to one free credit report. I don't mean score, that's different. One free credit report each year. So on or around my birthday every year, I go to annualcreditreport.com and I pull that detailed report to see exactly what is on my report. I have found fraud on my credit from that annualcreditreport.com before. I also found there was something that had pulled my credit down just a little bit, just enough to give me a higher rate on a mortgage. And I could not figure out what had pulled my credit down. And so it just happened to be around my birthday. So I was looking at my detailed report and I noticed that there was a medical bill for about $30 that was showing on there as an unpaid medical bill. And so I called my medical provider and I told them about it, and it was not unpaid. It was actually paid, but apparently it was paid the day that they had reported it. And I didn't realize it had been reported, and that was dragging my credit score down. So they were able to fix it within 30 days and repaired my credit score instantly. So that annualcreditreport.com, y'all use it, especially once a year. Make yourself a note around your birthday, or if there's a certain day of the year that you can remember to go and pull that annualcreditreport.com, absolutely go for it.
And also during COVID, you can actually go to that site weekly and look at your credit report. So, but I think it expires, I think either April 30th or May 30th. So if you want to go look at author reports, do that now, because due to COVID, you can do it on a weekly basis. And also keep in mind, this program, we actually will look at your FICO 8 TransUnion credit report for free. And it also gives you a score, and it will not impact you because we are an educational program. So it'll just be a soft hit on your credit report. So keep that in mind as well.
And can we touch on that just real quick? Because that is a question I get all the time from students is, if I go and check my own credit score, is that going to pull my credit score down? The answer to that is no. If you are attempting to borrow money and you've provided someone with your social security number because you're trying to get a loan and they pull your credit, yes, that is going to affect your credit score, just like we talked about with that FICO model. If you are checking your own credit score, or if trying to think of, cell phones, Verizon, I've noticed on my detailed report, you can see where Verizon has soft hit my credit score. That is not going to affect your credit score because I'm not attempting to borrow any money from Verizon. So the only time that your credit score will be affected will be if you are attempting to borrow money.
Thank you. I really appreciate the answers to all of those crazy credit questions. One more question for you all, and then I think I'm done. How do I start investing, and how do I be smart about it?
That is a great question. There's so much to talk about with investing. There's ways you can invest and save that are very conservative, whether that's a savings account or a money market account or a CD. There's other ways to invest that are more aggressive. Maybe that would be something like in the stock market. The important thing to know at your age is you're not too young and you do make enough money to start investing. And the reason I say that, again, 2 sons, one of them in grad school, and we did some math yesterday. He makes $14,000 a year. That comes out to about $7.80 an hour when you do a 40-hour work week. He invests. So I'm going to tell you in a minute a couple of easy ways to start investing. My other son, younger, still an undergraduate, well, he's working at Kroger, and he's making $11.25 an hour. So he too can invest, and he just got the paperwork mailed home for him to start contributing to a retirement plan. So I have encouraged him to do that. Of course, when you're 21, 22, 23, you think you have plenty of time. And the great thing is you do have a lot of time, and that is on your side. But you've got to start. If your company that you're working for, such as First Horizon Bank, I think they match 6%. So if I put 6% of my paycheck into an account with Transamerica, First Horizon matches that. So I've got 12%. Now, I'm at the age where I probably ought to be a little more conservative, but I'm not. And the reason I say that is because I have less time to retirement than you do. And as you get closer to retirement, you should get more conservative so that nothing happens to your investments. But I've still got it invested in mainly stocks, very aggressively. So one thing, let's go back to people your age, that both of my kids started actually in high school when they had a debit card. It's called Acorns, and you can download the app. And whenever they swipe that debit card, it will round up the money, and that will go into an account. And they can decide how they want that invested. You can be aggressive or you can be very conservative. Typically, the younger you are, the more time you have, I would suggest you be a little bit more aggressive, a little bit taking more risks with the money because you have time on your side in case there's a problem with the market or something like that. We can also talk about Roth and traditional IRAs. We can talk about annuities, which I help a lot of my clients with. That's a product sold by an insurance company. And they might put their money, $10,000, $20,000, $30,000 into an account that is guaranteed for 3, 5, or 7 years. It's not going to make as much as the stock market, but it's going to do a whole lot better than a CD or a savings account at this time. Trying to think what else. The main thing is you have enough money to start investing, and make sure you develop a relationship with a banker, whether it's here, whether it's at a credit union. Make sure you know that banker, you feel like you can trust that banker, and that you like them, and that they're not just trying to shove a product down your throat. Make sure they listen to you, they listen to your goals. You know, that's part of our financial wellness checkup. The first thing I do is ask a client, what are your goals this year? What are your financial goals for 3 to 5 years? And it really makes me sad. I have numerous clients who are 40 years old who haven't started saving for retirement. So they've lost all of that time. Don't be that person. Find someone. And, you know, there's tools. You can do it online through Fidelity, through Vanguard. And if you want to, that's fine. But I really recommend that you find a banker that's going to grow with you, that's going to listen to you, and answer your questions so that investing makes sense to you. It doesn't have to be difficult. It can be very simple if you find the right person who's willing to listen and ask questions and answer your questions. Amy, you have anything to add to that?
I'll just say I love Acorns. I use it. I'm glad you mentioned that. I love Acorns. I have saved so much money. And again, it's one of those kind of automated things that we talked about earlier, that since it's rounding up my change, I don't notice it as much. So I've been able to save quite a bit of money without really even knowing it through that Acorns app. So I like that app.
I am currently writing that down on a Post-it note.
So yes.
Yeah.
Mm-hmm.
Well, I had another question that was emailed to me prior to from Shuaipu Jiang, and I wanted to just ask on her behalf about building wealth. And I think that she is particularly interested in becoming more financially independent and earning more money and how to kind of build. So aside from, investments and savings, I just wondered if you guys had any additional tips for potentially trying to build wealth and to kind of create that I don't know, stockpile besides shoving it in the mattress.
I think it's really, if you'll just follow the fundamentals, if you will work hard, if you will save money, if you will live within your means, and if you will find someone, a trusted financial advisor who's going to help you, then you've covered all of your bases. And that would be my suggestion.
Yeah, I agree. I think being intentional about your plan and your savings goals, learn to say no. I'll tell you, that has been the hardest for myself and my family when it comes to being proactive and intentional about reaching our goals, is saying no to some of those fun things that we love. But that's helped us to build more wealth just by saying no and being really intentional about our savings goals and putting money back.
And also some of the things we teach our clients, basically everything starts with the budget, the savings, and the credit. But one of the biggest things that we focus on building wealth is becoming a homeowner. Because what that does for you is that, over time, you will gain equity into the home to where that's a way for you to start building wealth. And then from there, we'll just teach different things. But it starts, what we teach our clients is through home ownership.
Thank you. So I had another question from in the chat, and this one comes from one of our student ambassadors, Maya. Maya asked, what counts as long and short credit history?
I think the question is going back to that length of credit history, maybe in the FICO model. And that would be the length of your credit account. So for example, here's a personal example. I'm all about personal examples. They help me think. I have a credit card that I have had since 2006. This card is very old. I do not use it. I use it maybe once every 6 months to keep it open and active because I don't want that company to close my line of credit out, because I have a really long credit history because of this credit card. So I hope that makes sense. And then a short credit history would be, and I think there's probably two sides to this answer. One, you all are students. You all don't have a long overall credit history. You have a very short credit history. Whereas my credit history is much older than yours, just because of my age and how long I've been using credit. So I hope that helps answer the question. I don't know, Christy, do you have anything to add?
No, basically everything you said is, I'm in agreement with it.
Wonderful. I have another excellent question. One of our student participants has been saving up money in their checking accounts and wants to know how to, what to look for in a savings account, what to avoid, what to search for, some tips on, I guess, saving account products.
So I'll try to answer that. A savings account, you know, that's kind of the vanilla of the different flavors of investing and saving. A savings account is a great tool to start with. There's no reason to have a lot of money in your checking account, because if your debit card gets stolen or fraud gets on your card, then they have access, you know, to all of your money in your checking account. So a savings account is a great way to just put some money every month. Maybe you want to put $10, $20 every month direct deposited straight into that savings account. You can use a banking online app. You can make the transfer yourself. You can set up automatic transfers. But yes, if you're working, as part of being an adult, is you need a checking account. You need a relationship with a banker, and you need a savings account to save for emergencies, to save for a special purchase. Like Amy said, Christmas, I have a Christmas club account. It's just a savings account that I put a certain amount of money in every 2 weeks. I have a vacation club account. I put a certain amount of money into it every 2 weeks. So when Christmas comes around, and it is on the 25th this year, that's a joke. It's always on the 25th. But you're not surprised, oh, I don't have any money. You've already saved up your money. So absolutely, savings account, talk to any banker. We'll be happy to get you started with that.
That was great. Thank you so much. So I think that's going to be actually our last question. So I'm going to toss it off to Stacy to close this out. I am so appreciative to all of our students, and especially Maya, Morgan, and Sarah for their excellent questions, but really all of you, and then Christy, Robin, and Amy for giving me great tips and disguising it as a student program. So thank you.
Yeah, I was going to say the same. Thank you all so much for providing such great information to all of us. And so we appreciate it. And I don't need to cut off the questions. We have the perfect amount of questions. So in addition to thanking our great partners at First Horizon, I also wanted to take a moment to thank the students themselves, of course, the McClung Student Advisory Board, and the art and science ambassadors at UT, and the women of Haslam for their participation in helping to make this a great participatory program. We're both McClung and our First Horizon partners are honored to be able to provide this type of programming for our students. And so I encourage all of you to, if you're interested in learning about future programs, to visit our website, and also to follow us on our social media accounts, which is at McClung Museum, and I'll drop that into the chat box as well. But thank you all, and I hope you have a wonderful evening.